I
Okay,
can hear
great.
you. I don't
Awesome.
see anything though.
Yeah. All right, here we go. All right, welcome everybody. Thanks again for joining. I know it's a Saturday, but a lot of people are either having a day off or quarantine and really want to enjoy an educational collaboration event such as this. So I thought it would be a great time to for those who are new, if you're new to the crypto blockchain space, go ahead and type it in chat or just kind of blurt it out, unmute yourself. Um, no biggie. After the presentation, we'll try and break it up so it's more uh, object oriented where people can really just collaborate. So if you have questions, feel free to just unmute yourself and just pause and just ask a question. This is not going to be overly complex. Oops, let me go back really quick. This is just going to be for straightforward knowledge. So this is going to be rudimentary basics. So you have a grasp of what blockchain and Bitcoin and other cryptocurrency technology is all about. So again, I'm gonna go ahead and start. So hello everyone, my name is Robert Aronovici. I'm a technologist. I'm a co-founder of cryptosandtokens.com, and Mike's joining us. He's also a co-founder. We're all enthusiasts about the space. My background is I'm purely a web developer and just in the technology space, just to develop software and potentially moving forward dApps, and I'll go over what dApps are. And I'm here to hopefully educate you and open your eyes for possible future possibilities in this sector and as we move forward. So we all know, the virus that will not be named, what that's doing to society. And as a culture, we need to adapt to certain changes. So now's the perfect time to really start. Okay. So blockchain, this is the presentation, the evolution of digital transactions. And we're going to discuss what is a blockchain, what does it solve, and who uses blockchain, and what is Bitcoin. All right, disclaimer, I gotta obviously have this. So I'm not a financial advisor. I'm more of an educator for this purpose. So there may be, uncorrelated and some correlated mentions of, price and if you should invest and whatnot. So this space is relatively new. So there's a lot of speculation. Some may say, the speculation is really not there because the tangibles are really in fact there. But that's to your judgment. Everybody needs to do their research. So, I'm not gonna go out on a limb and say, oh, you really need to invest. So this is going to be for educational material specifically. All right, the history of blockchain. So blockchain was in its infancy in the early 90s, developed by these two doctors, and one of them co-authored and published a white paper on cryptography on a simple database. So it was just a means of digital tracking. So everybody knows what a notary is. So think of it in that terms where you digitally timestamp a record and it's out there on a database. So it's a bit more difficult and challenging to alter and manipulate the data. So, what that what the hurdles and challenges were to be solved was replacing, future notaries, double spending. So think of that as paper money that can be counterfeited. We've all witnessed that or seen that on the news. You may have been, you know, counterfeited once in your lifetime. I know I have. And then the other challenges are, how do you securitize, you know, these types of data going back and forth? So blockchain is just a means of transporting data from one, you know, one area to another. It could be peer-to-peer, business to business, yada yada, from one computer to another. And the major, you know, factor of the topic that's in discussion is transparency. So we all know the, you know, feds right now. This is a good case in point. In a sense, money can just be printed out of anywhere. So with the transparency factor with blockchain, what that can solve is, on a public and private means, you can see all transactions, you know, visibly. So anybody can interact and view the data. So let me go back really quick. Okay, let me just see if this launches. So I'll show you what the blockchain looks like. So everything is sort of in the cloud, so think of it in that way. Right here, we're seeing a Bitcoin transaction. Let me switch over. Okay. Hopefully, can you guys see my new window? Let me see. Oh. Oh, okay, let me switch over here. Okay. Are you guys able to see my current screen? It should be blockchain.com. Can anybody confirm?
Yeah. Yeah.
Okay, great.
You can see it.
All right, great. I didn't see the borders sharing, so again, Zoom is probably not the best candidate for this. I've used other means, but I really wanted to try Zoom in this environment. But okay, so for those who are interested, transactions for Bitcoin here, we're looking at the details here. We can see a hash, and the hash is just a set of, it's like a code string with certain details. So you can drill down here. You can see the time the transaction was received. Since Bitcoin, all it is just digital data. You can see how big the file was, and other information relevant to the transaction. So again, blockchain is usually a mean from peer to peer. So I'm just going to keep it as low level as possible. And here's another example. And just have a perception, there are many different blockchain platforms. So there's Bitcoin, Ethereum, et cetera, et cetera. So these are just the means of viewing the transactions online. So think of it as you were logging into your bank account, and then you can see the transactions. And then sometimes you can, depending on your bank, you can click on the details and see all the relevant information. Okay, so moving on. So this innovation definitely evolved and is maturing. So right now we have different protocols. So protocols in the blockchain space are equivalent to FTP, HTTP, and other means. So as more of these blockchains evolve and innovate, they're going to introduce different protocols to simplify the way we move data. Okay. So databases versus blockchains. So uh, this, I'm going to try to keep this as, low level as possible. So most of you know what a database is. So this is just going to depict the two differences. So database versus a blockchain. So a database is centralized. So data goes into one central point, and that central point can have a point of failure, as we've seen many times um, with these data breaches, um, and opposed to the blockchain in a fully decentralized manner. A blockchain will house the data on multiple nodes, and nodes are simply computers. So they're holding a copy of all the transactions ever completed on that specific blockchain. So like Bitcoin, there are many different people that run a node that have a capture. Everybody on the Bitcoin blockchain has a copy, the same copy, unaltered, of the transactions. So when a transaction is made, if somebody somehow altered one of the copies, that invalidates the whole transaction. So we'll get that. We'll go further into that. So, and at any point, if this is a little confusing, go ahead and stop and just raise your hand and voice, and we'll discuss. So immutability, that's one of um, the benefactors is it's not possible to alter records. So in a traditional database environment, you have a database admin and you have users that input data, and that data goes in, it's viewable, writable, editable, and you can delete records. So as I just described with a blockchain, specifically with Bitcoin, it's only one way in. And then as you saw with the Explorer that I had earlier, you could see that it was only read-only and view-only data. Okay, and this provides public transparency to prove the transaction took place. It's definitely more secure, and you'll see this in a video coming up. So different networks have different consensus. So Bitcoin uses miners, and what that is essentially computational powers from these computers that are trying to solve a mathematical equation to verify transactions. And again, that will be discussed in a few minutes. Okay, so blockchains are building blocks that keeps, you could say, people say stacking or linked together. So there's different terminologies. So think of blockchain as putting together a Lego shape. You can do it horizontally or vertically, and you just keep adding to the next piece. Your verification is usually visualized, and that's, think of it as the Explorer that we saw earlier. So once you remove or alter a piece that shouldn't be there, that invalidates the whole transaction. So somebody's definitely, maliciously trying to alter something. So sometimes when that does happen, then the whole network has to come together and deviate from the original consensus, and forking happens. And that's why sometimes, for those who aren't new to the crypto space, you probably have seen so many variations of Bitcoin. And the reason is because people can just fork it, and there's disagreements of what should be applied and whatnot. So, and that's usually community driven as well. Okay. So continuing on, so with blockchain, it's great for data going, peer to peer, and now we have to sort of think outside of the box to the next level. So on blockchains, you can execute smart contracts. Uh, this is just a piece of code that is executed on the ledger or the blockchain, and what it does is it executes a flow chart based a metric where if you want something handled, such as the best explanation would be if you're doing a home purchase, there's so many in between. There's a lot of pieces in between. You got to go through different third parties from start to finish. So this is going to eliminate a lot of the third party beneficiaries where they're going to just make the process inefficient. So this is usually executed between two parties. You set your rules, and then once it's completed, it's executed. Okay, so old traditional methods are definitely grindy. I know there's a few realtors here with us today, so and they can attest to that. How the home buying process back in the day was definitely slow and arduous, and it's definitely evolving and becoming a lot faster, but there's still a lot of red tape in between. So this is traditional contract or paper contract, and we're just trying to eliminate all paper trails, just put it all there digitally. Okay, so I hope this video works well with this presentation, so I'm going to start it. Before I start it, let me check with y'all. Anybody have any questions or any comments or opinions, or keep moving on? We could collaborate right now before we start this nice little video. Okay, if everybody's content, we're going to move on.
Hey, Robbie.
Yes, sir.
Oh, are you actually playing the video? Because we're not seeing anything
Did it
or,
not go
or,
through?
or hearing anything.
Really? Okay. I was
Yeah.
afraid of that.
It's just still on the Etherscan screen.
Oh, really? Okay. Hold on. Let me. That's what I was afraid of. I think somebody was that you comment? Okay, no audio. Okay. I think I know what the issue was. Okay. All right. How about now? Do you guys see the presentation again? Sorry about that.
Can see it.
Okay. Great. So
Yeah.
I think that. All right. Here we go.
Yeah, there's some volume.
Let me restart this. Okay. So this is the breakdown. It's an intro to how the blockchain works. So if you have any questions, just let me know. So I think I should be sharing the correct screen now.
Not getting audio.
No audio going through?
Correct.
All right, let me see if I can. I think I might just. All right, it's a YouTube video, so let me see if I can just play it in YouTube. Oh, Zoom. Sorry about that. Okay. Oops. Cancel. Don't want that. Okay. All right. Can you guys see the? It should be a YouTube page.
Can see it. Yeah.
Okay. Let's see. Is there audio now?
Nope.
No audio. All right. Well, let's see. All right. Well, I will actually, for sake of time here, for those who are interested, I know a few of you may have seen the video. Some may be interested. I'm going to post the YouTube video. So after the presentation, I would highly recommend just to review it as a breakdown. All right, I'm gonna move on to the next slide here. So give me a second to set this up. Switch back. Okay. All right. All right. All right, you guys seen this? Let me move forward. All right, so we left off explaining this. Did you guys see this slide? Right, we already went over smart contracts.
Yeah, I can see the slide.
Okay, great. All right. I'm just trying to figure out where I left off. Let's see. Okay, let's see. Brian says select screen, click advanced, select music. Okay, let me try that. Thanks, Brian, for that. Let's see. Click share screen. Oh, share computer. Oh, yeah. All right. That's a trick. All right. Thank you, Brian. Let's see if this works now.
Blockchains are incredibly
All right, do we
popular
have audio now?
nowadays. But what
Yep,
is a
yep.
blockchain?
All right.
How do they work?
You're the
What
man,
problems do they
A little
solve?
loud though.
How do they be used?
Too loud?
Like the name indicates, a blockchain is a
Alright.
chain of blocks that contains information.
Hopefully that's a
This
lot
technique
better.
was originally described in 1991 by a group
Yeah,
of
I can
users.
just turn my volume down.
It was originally intended to timestamp digital documents so that it's not possible to backdate them or to tamper with them, almost like a notary. However, it went by mostly unused until it was adapted by Satoshi Nakamoto in 2009 to create the digital cryptocurrency Bitcoin. Now, a blockchain is a distributed ledger that is completely open to anyone. They have an interesting property. Once some data has been recorded inside a blockchain, it becomes very difficult to change it. So how does that work? Well, let's take a closer look at a block. Each block contains some data, the hash of the block, and the hash of the previous block. The data that is stored inside a block depends on the type of blockchain. The Bitcoin blockchain, for example, stores the details about a transaction in here, such as the sender, receiver, and the amount of coins. A block also has a hash. You can compare a hash to a fingerprint. It identifies a block and all of its contents, and it's always unique, just as a fingerprint. Once a block is created, its hash is being calculated. Changing something inside the block will cause the hash to change. So in other words, hashes are very useful when you want to detect changes to blocks. If the fingerprint of a block changes, it no longer is the same block. The third element inside each block is the hash of the previous block. And this effectively creates a chain of blocks, and it's this technique that makes a blockchain so secure. Let's take an example. Here we have a chain of 3 blocks. As you can see, each block has a hash and the hash of the previous block. So block number 3 points to block number 2, and number 2 points to number 1. Now the first block is a bit special. It cannot point to previous blocks because, well, it's the first one. We call this block the Genesis block. Now let's say that you tamper with the second block. This causes the hash of the block to change as well. In turn, that will make block 3 and all following blocks invalid because they no longer store a valid hash of the previous block. So changing a single block will make all following blocks invalid. But using hashes is not enough to prevent tampering. Computers these days are very fast and can calculate hundreds of thousands of hashes per second. You could effectively tamper with a block and recalculate all the hashes of other blocks to make your blockchain valid again. So to mitigate this, blockchains have something that is called proof of work. It's a mechanism that slows down the creation of new blocks. In Bitcoin's case, it takes about 10 minutes to calculate the required proof of work and add a new block to the chain. This mechanism makes it very hard to tamper with the blocks because if you tamper with one block, you'll need to recalculate the proof of work for all the following blocks. So the security of a blockchain comes from its creative use of hashing and the proof of work mechanism. But there is one more way that blockchains secure themselves, and that is by being distributed. Instead of using a central entity to manage the chain, blockchains use a peer-to-peer network and everyone is allowed to join. When someone joins this network, he gets a full copy of the blockchain. The node can use this to verify that everything is still in order. Now, let's see what happens when someone creates a new block. That block is sent to everyone on the network. Each node then verifies the block to make sure that it hasn't been tampered with. And if everything checks out, each node adds this block to their own blockchain. All the nodes in this network create consensus. They agree about what blocks are valid and which aren't. Blocks that are tampered with will be rejected by other nodes in the network. So to successfully tamper with a blockchain, you'll need to tamper with all the blocks on the chain, redo the proof of work for each block, and take control of more than 50% of the peer-to-peer network. Only then will your tampered block become accepted by everyone else. So this is almost impossible to do. Blockchains are also constantly evolving. One of the most recent developments is the creation of smart contracts. These contracts are simple programs that are stored on the blockchain and can be used to automatically exchange coins based on certain conditions. More on smart contracts in a later video. The creation of blockchain technology piqued a lot of people's interest. Soon others realized that this technology could be used for other things, like storing medical records, creating a digital notary, or even collecting taxes. So now you know what a blockchain is, how it works on a basic level, and what problems it solves. Want to learn how you can implement a simple blockchain in JavaScript? Then check out this video here. And as always,
All right, so great. So just to recap, because I don't know if if this actually popped up prior to all the issues with Zoom, but so just a quick visualization, as I mentioned, databases versus blockchain as described. We have central authority versus the whole network, which is, obviously global. Anybody can run a node, and again, a node is just a computer that you're storing all of the chain, and that in the example is Bitcoin. Immutability, can't alter, and transparency. So, and then as I was describing smart contracts, if you didn't see this slide, smart contracts are just digital representations of the paper contracts between two people that are executed. And that's just the overview. So, we're just trying to replace that friction with a frictionless platform, like per se. So, all right, moving on. So, oops, didn't want to do that. Okay. Okay, so types of blockchains. All right. So as described earlier, so there's centralized, decentralized, and distributed. So centralized has just one single point of failure, as mentioned, and these are going to be typically, your databases that are housed by big data factories, such as banks or lenders, and even real estate, where they, like in escrow, they hold all the accounts for everything that's going on with the housing and properties. Decentralized, we're trying to have other nodes, as you saw, that can house the data, and everybody's going to have a copy of that. So it would be way more difficult. Instead of a central point of failure, you would literally have to attack all these multiple points of on the node to really alter or bring down the network. And then you have distributed, which is a lot more robust, because think of it as a spider web. It's very durable, and there's a lot of efficiency, where it's the analogy would be if a substitute teacher needed to grade the homework, what she could do is actually then go out and grab a lot of TAs to help facilitate that. So that would be one analogy. So this is just gonna harden the network. All right, so moving on here, we have so a problem which can be solved. So a lot of people in the industry ask, what is the problem and how do we solve it? So one use case would be money. So we can change the way we deal with money. Obviously, over the course of history, we've human civilizations, they've moved from seashells to metals to precious metals and paper money, and as humans, we like to evolve and think outside of the box. So this can obviously results in correcting, as mentioned earlier, counterfeit and inflation. Who has this problem? We know banks, governments, as much as they don't like to admit, they definitely have these issues, and they can be tackled. So one way we know blockchain is, here to stay, as well as Bitcoin, in my perception, is the Lindy effect. So if nobody's heard of what the Lindy effect is, it states that anything that lasts for 10 years within a cycle, whether it's a market cycle or just an existence, has that much exponential time to mature and live forward. So in this case, Bitcoin was incepted in 2008, and we'll go over that in a second. And so obviously that's been 10 plus years. It's still thriving, and it still has a market, and a lot of these other cryptocurrencies will be in the same boat in the coming years as well. So this can alleviate government bodies who feel pressure from their citizens or other entities, and looking for enterprise solutions. Why should we solve this problem? It allows, balance of power, checks and balances, as mentioned, being transparent. People want to know, especially with like the stimulus package. A lot of people have small businesses. I'm sure most of you applied for a loan and you're still waiting. You're sort of left in the dark. A good case in point is with the stimulus checks. A lot of people still haven't received them, and they're just out there in the dark. So blockchain could potentially make that more streamlined and efficient, and help with people's tensions and ease that. Any questions so far? Let's see here. You got it. Hopefully yep, okay. All right, great. So, all right, if no questions, we're gonna move on. We have a couple more slides here. So solutions and use case. Let's see here. Let me make sure I'm okay. So we got a use case. So use case for blockchain is peer-to-peer transfers, as was implied. You can create a store of value. You can use it for day-to-day transactions. So not just money, but you can transfer data. Banking itself will be innovated, and I feel the urge, like blockchain would obviously alleviate that, because we saw, especially with these loans, banks just being overwhelmed, overran. The process can be, I guess you could say fixed with a blockchain solution with smart contracts, and it would just make things, the process a lot more streamlined, as mentioned. So you can then tokenize assets, collectibles, commodities. Those can be represented in a digital manner, and then you can then, as I showed you earlier on the block explorers, you can then find that item, digital representation, and if you own it, that gives you validity. So yeah, so these were a few of the examples, a case in point. So you can cut out third parties. So those people, if you have family abroad and you send them money, through different various solutions, bank wire transfers, you don't have to use them. You are obviously the result's gonna be saving costs, cost, time, and that way there's more money being saved in your pocket, and then your loved ones will receive that transaction, quickly, and save the money as well. So the other solution for the case in point for store of value is, you can with blockchain and cryptocurrencies, you can have a finite supply. So the inverse would be inflation, where you can just print dollars, which is just a representation of a budgeting system that the Fed or the government or entity has. So the more money you print, that's going to inflate down the line. And what is really the value of that paper dollar? So the piece of that paper dollar, that dollar has, over time, it just declines in value. So $1 a couple years ago may have been able to buy you a bag of chips and a soda. Nowadays, you can only buy a bag of chips. So there's countries and nations that are obviously exploring blockchain so they can utilize that, especially African countries and Asian markets. They're already transforming. So if you haven't seen in the news as of lately, China has already implemented a DLT, a blockchain payments rail solution that entities, enterprises, and even folks will download on their mobile phone, and they're gonna obviously move away from the paper dollar and then track everything digitally, because as it is, we're in the digital age. So we're just right there to the next step for evolution. So as I mentioned, tokenizing assets, think of it also in the realm of video games, real estate, even stocks. Just what you can think, you can tokenize a representation of that tangible good. So this will be in forms of ERC20 tokens. So just not to get too crazy, but Ethereum is a platform, a blockchain platform, and you can create these subset assets on the platform. That's the token representation. So yeah, so even the New York Stock Exchange, they're exploring these avenues, the blockchain avenue of technology to incorporate these. All right. So if you build it, they will come. So Bitcoin, just moving forward, Bitcoin already is integrated with many solutions. So it is the first killer dApp. So a dApp in lingo is just a decentralized application. So we're all used to apps. Like if you go to your iTunes or Google Play Store, those are apps. So dApps are just decentralized applications where there is no one man controlling the inners of the application. So it's fully distributed around the world, and people can use it. We're still, I feel like we're still a few years away until that's fully smooth and efficient. There's a lot of problems with a lot of these dApps where they're still in its infancy. A lot of people are exploring. If you think about it, we're like in the early web and internet days where the internet, just logging on was really difficult. You had to know protocols and how to sign in and command lines. And then browsers came on board, and now you can just get online with your mobile phone. So so big key players, Microsoft, Starbucks, Fidelity, they're exploring blockchain as well as playing around with Bitcoin. Even Facebook, we hear them that they're trying to launch a solution with their own coin, and we're still waiting to see what they're developing in the background. So is it going to be a competitor to China's digital currency solution? We're gonna just have to wait and find out. So this is a little outdated, but these are some of the players that are developing or have some solutions with Bitcoin. The most popular application or dApp is a wallet. So a wallet is basically a storage unit. It could be on a device. It could be on a piece of paper that has your address where you keep your digital assets. So just remember, Bitcoin, all it is data, but it can be, it can be factored as data as in currency or store value. It has a lot of meaning to different people in different meanings, in different ways. Okay, so this was more primarily geared towards real estate, because I was teaching some realtors here. So I guess this can apply, just to go over this briefly. In the real estate, there's a lot of problems where, people falsify, documentations, and land registry can be a big thing that blockchain can really resolve. I think there was like back in the day in, I think, Ecuador and in Central and South America, the governments, basically ripped off a lot of landowners, and those landowners had a piece of paper that said, "This is my land," but those entities, said, "Nope, not anymore." So, with the blockchain, you can at least, validate and, prove that you are the owner, because it's until the end of time that data is going to be out there on the network for everybody to see. So you can at least voice your opinion and matter there, because a piece of paper can always be shredded, altered, lost, you name it. So, all right, so Bitcoin as digital gold, as some say. So not everyone can own, gold in its entirety. So, moving forward, the millennials would rather be more inclined to using digital, means. So with Bitcoin, it is actually digital because it's all codes and it's out there in interwebs, as people say. So you can own a fraction of it as opposed to a 1 ounce bar. So just think of it in that respect. So the beautiful thing about Bitcoin, as opposed to gold, gold can be mined. There's always mining facilities that are exploring and finding those mines. As Bitcoin, it's programmed to only have 21 million Bitcoins exist. So that's deflationary, and it's transparent, so people can see, oh yeah, there's this many. No more can be created. So, and then if you break that down into fractions, which is a beautiful thing, moving forward in a financial monetary system, you can break that down unequivocally. So, as I explained, we're always finding gold. And I just, my perception, I mean, both for investment wise, I mean, people always tend to go what the trend is. Gold is trending right now, but Bitcoin will definitely trend once people are more suitable and understanding of how technology works from your mobile phone or computer. It's just like the analogy is like the jitterbug. You got to make it super simple and efficient where the numbers are big. It's easy to look at something and just you can easily use it within a couple seconds. All right, so just a couple final thoughts here, just to keep it within the hour of the presentation. You know, that the internet was, you know, had a vivid imagination, and look where we've come with that technology. So 20 plus years and still grinding with blockchain and other cryptocurrencies. The foundation's there because most of this needs the internet or some type of network to run efficiently. So this will give people the freedom to shop, you know, because what cryptocurrencies does is it gives people the power to manage and budget and have the empowerment of actually having the money in their pocket per se. So you know, as I said, there's a lot of speculation because people fear new things, you know, and anytime that promotes fear, you know, you kind of wonder, well, could this actually have a lot of positive benefactors moving forward? So that's basically, in a nutshell, the just quick gist of blockchain and cryptocurrencies. If anybody has any questions, or, you know, like I said, Zoom was probably not the best technology to use, but you know, I apologize if it was kind of wonky, but now would be a great time to collaborate. We could discuss anything you guys have in mind.
Hey,
Any
Robbie.
thoughts?
Yeah.
Yes.
Hey, Robbie, there's a couple questions in the chat. So one is, can you talk more about how it saves money, like cutting out the middleman and third parties?
Oh, sure. Yeah. Okay. Thanks, Mary. That was Mary. Okay, great. So let's let's just, all right. So we'll discuss that. So yeah, so we know with third parties such as banks, or any institution that you're dealing with, they're just servicing, and obviously they're taking a fee. So nothing in life is ever free, right? So with blockchain and cryptocurrencies in conjunction, if we're going to use Mike as an example. So I can load up my app, my wallet, and send you a transaction, right? So Mike, between you and I, the only third party are the miners. So those miners obviously need to be incentivized. So what they're doing is they're transacting, they're trying to calculate the transaction, and once they've validated, they're going to receive a little incentive. So that would be the equivalent of like if I were to send money from here to Russia to, you know, maybe some friends or family, I would have to go to a bank. So they're the third party. So they're taking, you know, a small service fee, and then they have to use other intermediary, third party, you know, tools and other entities to perform that action. So the way you're saving money is, you know, from not having to deal with all those services. So hopefully that kind of shed some light on that. All right, so let's see.
just to add to that a little bit is
Yeah.
you know, there's a lot of fees that go, and even when you're dealing internationally, right, then you're paying international fees, and then there might be 3 or 4 middlemen in one transaction, and you know, so there's a lot of money that's spent in fees, you know, even dealing internationally, that don't exist in the cryptocurrency space. And that is, you know, for an example, let's use the bigger guys, because these guys are all doing it and they have been for years. So just if I'm Microsoft, and you know, Microsoft, I'm not a hardware company, I'm a software company, but I need hardware to run things, say like my Azure cloud. And so I might call up IBM and say, hey, I need $10 million worth of, hardware to run my cloud services on. And I'll just send you digital currency. There's no banks involved. There's no international fees involved. And there's no bottleneck involved with the current banking systems. So in that sense, I mean, it's just people trading with people. And these big companies, they've been doing this for many years at this point already. So, just to add that little tidbit there.
Yeah, and I think who was it? I think Boz had a great diagram and explanation. Back in the day, ADs, we had a bartering system, right? And it was a fair, free market where you could, actually imply that, for trade of goods, you could trade 10 seashells for, a chicken or something. So now we've, in our current day and age, we went through the gold standard and we came off of it. And now we're sort of just kind of in limbo. Like we're trying to figure out where to go with our financial,
Yeah.
state, right?
Yeah. Well,
So
I don't know how long this was scheduled for, but I wouldn't mind just adding a few of my own comments, and I'll try to be
yeah,
I'll try to be
yeah,
very quick with it because I know there's a few new people on here, and it's just kind of like if we throw blockchain just in break it down to an absolute simplest form of the fundamental piece of it, it's just to simplify it, it's just a digital ledger that keeps track of digital transactions. That's pretty
yep,
much all it is in a nutshell. And it writes those transactions in blocks of data which chain together, hence the term blockchain. But also just, my personal opinion is the current banking systems and the current fiat systems worldwide are failed systems. They're not scalable, they're not efficient, they're easily hacked, they're easily taken advantage of, and there's a lot of fraud. Like fraud is in the billions per year now. The internet made it easier, so that's a big issue that cryptocurrency solves is that fraud. And I think a good example of that, if any of you have seen like that movie, I think it was Catch Me If You Can with
yes,
Leonardo DiCaprio, where he goes around writing the checks. So like if the checks are easy to clone. And I think in that movie, he goes around and he has cloned checks and he's writing checks on checks that were already written and cashing those out before the original check actually gets cashed through the banking system, which could take up to 30 days, right? So he exploits that vulnerability, I think, and that kind of shows it in that movie. And cryptocurrencies kind of handle that problem. Another big issue they solve is, and I didn't know this, this was a stat that kind of blew me away, was 70% of the world's population doesn't have a bank account. And there is no solution for that with the current paper money banking systems. Um, Digital currencies can also address those things. And then I just wanted to make sure everybody kind of had a good concept of the smart contracts. So smart contracts, everybody keeps probably hearing about all this automation that's happening and automation that's replacing jobs, and artificial intelligence replacing jobs. All these technologies are running on in the blockchain space. And how are they running? They're running based off of the smart contracts. So, I think as a good example in cutting out the middleman and cutting jobs out is a friend of mine works down in Long Beach on the harbor, and he's been down there for 35 years, as a longshoreman and crane operator and all that stuff. And he told me they've been working on automation for the last 10 years. And if you really break this down and think about it, you go, a ship pulls into the dock and that ship can be offloaded by automation. That ship can be put into the trucks with automation. They have self-driving trucks now. So the trucks can drive themselves to the store. And then you can have automation to offload the trucks. And then you can offload the trucks there and load the shelves in the store, all done with automation from the time the ship comes in, even from the time the customer goes into the store and gets what they need and walks out. Because I don't know if any of you have seen the new Amazon facilities, but they're already doing this. So I can go to the Amazon store, the physical store. I pull into the parking lot. There's the artificial intelligence picks me up who I am already based off of facial recognition. I walk into the store, I grab what I need, and I walk out, and there's not one person there, and my account's automatically charged. So this is already here. And just think about that process from the ship that just pulled into the dock all the way to the customer going in the store and getting it, not one person involved. So how many jobs just got wiped out? A whole lot. And, you know, this artificial intelligence that's enabling automation is running in the blockchain space, and how to define that automation is done with smart contracts. So this is here to stay. It's here to stay. My personal opinion is this will replace the fiat systems. And I do think that Bitcoin will become the new store of value, and it will be, because right now, if you look at the world's markets, right, they're all compared to the US dollar. And if we just pay attention to what's going on right now, well, what happened a few days ago? Oil crashed, right? And
Oh yeah.
oil went negative. Well, what backs the dollar? Oil. Like the petrodollar has backed the dollar since the 70s. So, you know, if oil crashes and that's what's backing the dollar, I mean, going and firing up the printers is is only going to work for so long before that
It's a temporary solution.
just kills everything.
It's definitely a band-aid. You know, printing more that just causes more inflation, and then later down the line, the next generation is going to have to pay for that because, as I mentioned, $1 will barely buy you a stick of gum. So, yeah. So I know there was a question here from RSS. So the USG's new digital currency use is based on blockchains. How does that impact cryptocurrencies? So that's a good question, because most of these sovereign blockchains, whether it be by governments in other countries, they're going to peg it based off their evaluation of their currency, whatever that may be. But people are going to realize that, you know, at some point that's really no different than the dollar, because even now our representation of the dollar, even though we have paper dollars, when you log on to your bank account or use PayPal or Venmo, it's just a digital representation of the value you had in paper. So how is that going to unfold? We'll see, because then people are going to explore. I think people are going to wake up and explore other alternatives, and seeing how cryptocurrencies has a more advantageous first mover approach with, you know, seeing everything on the Explorer, depending on the projects, you know, because not all cryptocurrencies are the same, obviously. You know, others have different supply. As mentioned, Bitcoin has 21 million, you know, and there's other cryptocurrencies that have different, supply. And then some are, you know, there's a lot of pros and cons, you know, it depends on the speed, what consensus algorithm they use, and, you know, there's a slew of, attributes between them. So that's going to be the main difference. And with these sovereign and sovereign currencies, even though they're using DLT or blockchain, they'll be more central focused, meaning the government is going to dictate how that spending and who, and they can track, because they can actually pool all the data. So it's not a fully public, it's going to be public versus private. So That's the main ingredient to take away from this. You know, Bitcoin is public, so anybody can see it and use it. And then there's going to be private blockchains, which are a glorified, upscaled database, which one central entity will be able to really control in their manner. So if anybody has anything to add to that, Mike, you have
Yeah.
any 2 cents on
Well,
that?
no, I mean, that's pretty much it in a nutshell.
Okay.
Mary asked another one. Can you tell us more about why Bitcoin would be a good candidate for a store of value and why is it so valuable? So Bitcoin, I have a lot of opinions on this. Some of it's proven, some of it's not. But I fully believe that Satoshi Nakamoto is the CIA. I mean, if you look at the Satoshi Nakamoto white paper, I think it's just the name of the project, not a person. And that same white paper existed in the 90s behind CIA walls. So the same exact white paper. It makes sense because whoever created Bitcoin, which is still a mystery, is they have the initial wallet of the Bitcoin creation, which contains 1 million Bitcoin. And since then, there's been 4 million Bitcoin added to that wallet. So whoever owns that wallet has 5 million Bitcoin, and there's eyes all over the world on that wallet, and there's never been any outgoing transactions from that wallet. So they're all still sitting in there. So if you look at this as there's only 21 million Bitcoin that can be mined, and the entire market is compared to Bitcoin, and Bitcoin started it all. So that's why I believe that Bitcoin stays around as the store of value, because I think that the elites, or whoever you want to call them, are the owners of that 5 million Bitcoin. And that's not even taking into consideration all the ones they went and confiscated from people with the FBI raids and all this and that years ago. Like, they still have all that Bitcoin. So whoever has that will still be in control of the majority of the wealth in the world. So they will continue to try to remain in control of all the wealth like they are now. I mean, 1 to 5% of the world's population controls 95% of the wealth. And those, I think, in my own opinion, are the same entities that own that original Bitcoin wallet, which will be, a lot of the wealth, especially when the fiat systems crash and go away, which I think we're in the process of right now. But
And that's what's going to
it,
be beautiful
yeah,
whenever, whenever and if ever we see those assets moving from those, the
and
top
another thing,
controlling.
another thing, Mary, on that is, everything is compared to Bitcoin, you know, from the market standpoint. So, it's there, it's in place, it started it all. The control systems own it all. Like, it just, to me, it just adds up that is, and everything's tradable through Bitcoin. So Bitcoin, like, when I got into this probably about 4 years ago at this point, Bitcoin was the only thing you could trade through. So if I wanted a different coin, say even Ethereum back then, like, I would have to convert whatever I had to Bitcoin and then go trade it for Ethereum. So, I mean, you can trade most things through Ethereum now, but just back then, to be able to trade for other coins you wanted, say you want Litecoin, how would I get Litecoin? I would have to take what I had, trade it for Bitcoin, and then go trade it for Litecoin. So everything is tradable, including the US dollar, through Bitcoin. So I think it just stays that way. I hope that answered your question, Mary. Let's see.
And let's see, we'll go another question. Will the final outcome be a compromise between pure decentralization and centralization? Even if decentralized, it seems like it always major players way able to control it. I mean, yeah, no matter what, no matter what type of system we go to, there's always going to be the 1%ers. Right? I mean, I just
Yeah.
don't think there's a pure way to avoid that because, as you mentioned, you could go to the blockchain explorer, filter out, see the top holding wallets, and I think there was a review just a couple weeks ago. There's still less than 10,000 wallets that have at least one full Bitcoin or more. So it shows you, we're still early. Whether theories abound.
Yeah.
Because I think it was a crucial factor that had the bubble not been popped at 20,000, I think we would have seen a lot higher evaluation, from
Yeah.
USD to BTC. But there were strategies in place with futures and other tools because, as you mentioned, Mike, you've been in the game for a while now, and I know you guys were trading like 3 years ago, and with that in mind, there was only BTC pairing, and the ETH was barely introduced, and there were no stable coins. So stable coins would be your semi-centralized, but to some extent, there are some um, stable coins out there, and for those who don't know, stable coins are pegged to some asset that's being backed. So in some cases, it's going to be USD dollar, or you can even back it by gold or oil or something. So those stable coins will also have to take a look because how decentralized are most of those um, stable coins going to be. So moving forward, also, before that bubble pop, as you mentioned, there was only spot trading. There were no margin trading. Only like maybe a handful of exchanges had margin trading with leverage and all that. But man, once future contracts were introduced, that was like you just didn't have a bull mentality. You had those bears that came into play, and that's what makes it a free market. This is not financial advice, but in any true free financial market, you have both buyers and sellers. And what we're seeing in the stock market, if you take a look, it's crazy because the stock market crashed, and the stock market is semi-rigged because what did the feds do? They just promise more funny money, and algorithms do what they got to do to correct from certain crashes. But if you take a look at certain companies on some of these, the S&P and the Dow, it's like you look at these companies and logically you're thinking, how is this company even pumping when there's no earnings or fundamentals? They're probably going to go bankrupt because of the way we're living right now with the whole situation. But you have companies just pumping out of nowhere, and it's like that's just a one-way mentality street where that's totally semi-rigged right there. So in the cryptocurrency, I think it's still in its infancy. In there, people are going to try and regulate it, but I think it's going to be a full-on free market because it's 24/7, and it's global, and anybody can really participate in it. So some of your kids and their kids will, be in school one day with their phones and be making trades and sending, digital assets everywhere. So yeah, so hopefully that kind of explains, centralization versus decentralization a little bit, but
That's
they,
Brian, that's a great question though, and that is a big concern that most people have, because if we look at the core concept of the creation of the cryptocurrency space, you know, it was for people to get their privacy back, and it was to transfer wealth back to the people where it should be. And the control systems, the banking systems, the governments are always going to want to have it centralized. And there's a lot of the population that doesn't want it centralized. So if there will be a compromise in the middle of that, I mean, I think we could hope for that. And I don't know if you guys have heard of Zenfin, but you know, Robbie knows about Zenfin, and whether that project pans out or not, we certainly hope so. But I think one of their target areas, you know, and one of their claims is they're a hybrid blockchain. And what they mean by being a hybrid blockchain is they kind of play a middleman, so to speak, but just from an interface standpoint between centralized blockchains and decentralized blockchains. So I think what their goal is to be able to satisfy both sides of the spectrum on that, you know. And so that is a great question, and I think just we hope that there is some sort of compromise in there and everything just doesn't become centralized, and you know, we're the powers to be, so we'll just say everything that's decentralized is illegal or something like that, right? Like, you know, we certainly hope that doesn't happen, but you know, there's no guarantees it won't, or at least won't for even if it did, to my honest opinion would be it would be a temporary type of thing. And this is already here. It's already here today, and we can already do it. There's a lot of privacy stuff out there. And what Zenfin does is they allow you to have the transaction that can be seen, but they can't get the details of the transaction. So, you know, if Robbie wants to buy my house, say, I could say, just send me some Bitcoin. Send me the amount of the value in Bitcoin between him and I, you know, and he buys my house. They would be able to see the transaction, but they wouldn't be able to see the details of the transaction. So the transactions would be traced, but they would still remain private. And if something like that is the compromise and that satisfies both sides, I think then, you know, I think that's we'll see what happens. But it's a great question.
Yeah, great. All right, we're gonna wrap it up. But
Right.
yeah, just on a note, I mean, it's not to say all banks are going to, you know, go away like the dodo, but there are going to be those candidates that will integrate and adopt these changes for sure. You know, because everybody's, you know, relies on banks to do something. You know, obviously to hold their money and to supply services, but yeah, it's going to be interesting. I think 2020 is already interesting. I think moving forward, you know, the virus that shall not be named is obviously going to be speeding up this technology and the way people think, especially with contactless and, you know, just thinking outside of the box, you know, with the gig economy, how, you know, things are going to change, just the way we perceive things. So, yeah, just keep that in mind. So I want to thank everybody. Thanks, Mike, for also jumping on. There were a few people that participated. Totally appreciate that. I know it's totally weird just moving everything online, but this is the world we live in now. You know, how quickly things have changed. And just like this changed, as I mentioned, the world is going to change economically and the way we do work. So hopefully for the better. So you guys enjoy the rest of your weekend. If you have any questions, just email me. I'll send you. Most of you guys know where to email me. cryptos@tokens.com. You can also visit our website. And yeah, hopefully you guys learned a little something. I can also send you the presentation if you guys would like a copy, and then you can share it amongst your peers. And hopefully we'll we'll get through this quickly with this whole virus thing. So thank you again, guys. You have a great one.